The U.S. Securities and Exchange Commission (SEC) has asked Coinbase, the American Stock Exchange Supervisory Authority, to cease trading all cryptocurrencies except for Bitcoin, in order to avoid a legal dispute. The SEC claims that Coinbase acted as an exchange, broker, and clearinghouse for crypto assets without the necessary registrations. Some cryptocurrencies, including well-known ones like Solana and Cardano, were identified as possible securities. Coinbase CEO Brian Armstrong stated that the SEC even demanded the removal of all over 200 tokens traded on the platform, except for Bitcoin. The U.S. Securities and Exchange Commission (SEC) instructed Coinbase to suspend trading in all cryptocurrencies except Bitcoin before taking legal action against the exchange. This move indicates the agency's intention to assert regulatory control over a wider portion of the crypto market. Coinbase's CEO, Brian Armstrong, revealed that the SEC recommended delisting over 200 tokens, leaving only Bitcoin, prior to initiating legal action against the company for failing to register as a broker. The SEC's case classified 13 cryptocurrencies on Coinbase as securities, suggesting that offering them to customers brought the exchange under its jurisdiction. The SEC's push for wider authority over the crypto industry was evident in this request, aiming to bring most cryptocurrencies under the classification of securities. This demand put Coinbase in a difficult position, as complying would have set a precedent that could have forced many other American crypto businesses to operate outside the law unless they registered with the Commission. As a result, Coinbase chose to go to court to determine the legality of the SEC's interpretation. Regulation of the crypto industry has been a gray area, with both the SEC and the Commodity Futures Trading Commission (CFTC) vying for control. Gensler, the SEC chair, had previously expressed his view that most cryptocurrencies, except Bitcoin, are securities. This recommendation to Coinbase shows the SEC's commitment to implementing this interpretation in its efforts to regulate the industry. Interestingly, Ether, the second-largest cryptocurrency, was not part of the SEC's case against Coinbase, and it was not listed as one of the crypto asset securities in the SEC's lawsuit against Binance, the largest crypto exchange. The SEC claimed that its enforcement division did not make formal requests for companies to delist crypto assets. However, its oversight could bring stricter compliance standards, which might impact the business models of certain American companies that assume their crypto tokens were not securities. The SEC's involvement in regulating crypto tokens raises questions about whether all cryptocurrencies should fall under its purview, and this ongoing debate might require intervention from Congress to determine the future of public offerings and retail trading of tokens. The SEC did not provide any comment on the potential implications for the rest of the industry if a settlement involved Coinbase delisting all tokens except Bitcoin. SEC Chairman Gary Gensler reiterated his view that most cryptocurrencies could be considered securities and emphasized that the industry should be subject to increased regulation. While the SEC emphasizes that the recommendation to Coinbase is not a formal requirement, many market observers see it as a sign of heightened regulatory control. For cryptocurrency exchanges like Coinbase, the legal classification of cryptocurrencies has been a gray area until now. However, the SEC's demand could be a wake-up call to rethink business practices and prepare for stricter regulation. The era of unregulated practices in the crypto space seems to be coming to an end, and both exchange operators and token projects must prepare for stronger regulation, the extent of which will depend on ongoing procedures. It remains to be seen how much influence the SEC and the CFTC Commodity Futures Trading Commission will have on the cryptocurrency market.